Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the cryptocurrencies. It's today Thursday, and usually we have prepared the updates on Thursdays and Mondays on cryptocurrencies. So no doubts the Bitcoin currently is among most interesting markets because of the performance, because of the background that we have here. But at the same time, somehow I have some real gut feeling that this is something, well, not very reliable. As we have shared in our Telegram channel in relation to this situation, we think that the same running up into the alternative assets while the crisis in the banking sector stands. So people just taking out deposits, put them somewhere. So in a lack of time to make some valuable investing decisions, just put in the crypto and sit on the hands, wait what will happen before they will decide what to do next, whether to buy bonds or put the cash in another bank or buy some ETF or something of that sort. And currently we have actually the performance that that we have. So it's very similar to what we have in February of 2022 when the special military operation has started. Lots of demand for the cryptocurrencies has happened right on February, which is because just Russian oligarchs trying to avoid sanctions put the money in cryptos to save them for some time. But once this has happened and cash flow was over, fundamentals have taken the lead and pushed cryptocurrencies lower. So here I wouldn't exclude something the same. In the best scenario, we could get the same kind of the ABCD as we've got in Friday. So it might be in the way of the hand and shoulders that we talked about, and the target will be around 29.30. This is the minimum ABCD target of the hand and shoulders, which is agrees with the major 30% resistance and take all these previous lows, and supposedly probably it will be also over buttons higher. So not just two levels, it's previous lows and agreement with the resistance. But somehow I suspect that screaming "let me out" could start sounding earlier when the demand for the Bitcoin will drop. Actually, as you understand, the Fed has started all the stuff around Silicon Valley Bank, not just make happy the holders of the cryptocurrency. They need money. They need money to finance the bond market. They need money to finance the budget deficit. And they are crushing right now the stock market, not just because to pump the liquidity into the cryptocurrencies. I think that next the sacred victim will be actually the cryptocurrencies, and I am not sure that we will get a target on these head and shoulders. Although currently everything stands more or less positive, but of course I also could be wrong. Nevertheless, if you intend to take the position on the long side, it is possible. Maybe it is makes sense to do, but trying to control your risk better, minimize your risk, placing tighter stops. So just keep an eye on the market and just control your risk and manage your risk with any long positions, because this is really tricky performance, guys. Personally, I do not like it. So on the 4-hour time frame, on a daily chart, rally up from our right shoulder was really significant. So market has challenged the neckline of the hand and shoulders, but due to the daily overbought, it was not able to break it up. So this is not the problem. It's just it's not the failure of the hand and shoulders or something of that sort. It's just technical barrier. So market was not just breaking up. Need to wait for some time and see what will happen. If somehow Bitcoin stops here, will not continue upward action, even when the overbought will be eliminated, and just trying to drop down once again, falling back to the right shoulder bottom. this will be negative sign. It mostly will be bearish and increased risk that hand shoulders could fail and market could just keep going lower below the right shoulder. In the current circumstances, when the bottom of the right shoulder is set, and when it's set in really aggressive way, so you can see a really sharp and strong upward bounce right there, normally bullish market has to keep going higher. Yes, it could make some stops, it could make some minor retracements on the lower time frame, but it still have to keep going higher. The target, as I said, 29.30 approximately, 29.30, 29.35, it's right there. From that standpoint, now if we take a look at the 4-hour time frame chart, here we see, just a minute, let's take a look on the hourly. On the hourly chart, so here's we have good thrust, and right below the market we have agreement support around the confluence area. We have confluence 2367, 2388 right there, and with this ABCD pattern we have the COP target right in the same area, 2375. This is supposedly an area that should hold the downward retracement, especially that retracement stance not very strong. So that's the area, the first area that you could consider for taking the long position if you would like to. But do not hide your stop too far. In this case, if you suggest retracement will be deeper and, for instance, AB equals CD somewhere to the 2276, in this case it would be better to wait for this retracement and also place relatively tight stop, for example, below the lows of the second part of the swing here. I hope you're getting what I'm talking about. So your stop should be, in the current circumstances, in current environment, your stop should be relatively close. If you suggest retracement will be deeper, just do not buy here and place stop right below this area. You just wait for this deep retracement. If you still would like to buy here, place your stop right below the confluence. Do not risk too much, because situations that's really tricky, and I think that the cryptocurrency will become the next, as I said, hostage and victim of the drive of the liquidity that Fed is doing right now, and probably it soon could change the direction. But as I said, formally we have the bullish context, and from that standpoint we are considering currently the bullish scenarios.